Good morning. Quick sound check. There we go. You guys are quick. All right. Here's what we've got. So let me blow this up a little bit. Well, that's maybe too much. So we've got the pivot, which is none other than yesterday's close. Okay. But there's a method to the madness. So here's the situation. In last night's video, we talked about this area, 435, give or take, right? Specifically. Why? Because it's the breakout area. We talked about it. Here it is. How often does that happen? A lot. And so, you kind of go with the thing that happens the majority of the time, over and over again. It's the same stuff. The market just keeps doing the same thing. So this area, under normal garden variety conditions, would produce a bounce back in the other direction. However, they can spike it. They're already down here. They can hit it and run right at the open. They can come in a little bit more. Let's call it, the number is down to 434 and a quarter. Call it 434 into those moving averages. They'll click up a little bit at the open. And that's the area that we're expecting a bounce back in the other direction. Now, the other side of that is getting below 434 for long on candle closes, pushing below. That's going to open the door for 432.65. Not that they have to get there, but that's really the next number. But this is a garden variety retracement. You're creeping into the end of the week, holiday weekend. Are they going to kill the tape, or are they just doing a retracement and they're going to actually end up higher at some point? We're playing for the gap, okay? Jerry speaks at the opening bell. You know what? I was kind of aware of that yesterday and I forgot. Thanks, Shannon. What's he talking about? No idea. So he can certainly cause some movement in the market based on what he's talking about, but is he going to shake the market at the open? I don't know why he would, but thanks for putting that in. So Jerry's speaking around the open bell. Fantastic. Either way, doesn't change anything. No, ECB, okay. Not sure what to make out of that. Doesn't change anything. That's the schematic. All right, we're looking for a bounce back in the other direction. Your target is the gap. Before the gap, that's the actual target. Got some stocks on the move. We'll see what happens. A couple are close. I think they were. And not so close. Not so close. All right, whatever. We'll see what happens with those. A couple seem far away, but they're lighter participation type stocks, lighter volume. So they can move a little bit more than you think when a flood of volume comes in. That's the concept. So you have to adjust accordingly. Alice, I would say, yeah, but that's, your own risk. Question is, can a trader buy right here? If you're buying the futures, can you buy it right here? Willing to buy it lower? You can, but you have to realize they can spike this. It's a 50-50 coin toss whether they're going to pop it up at the open or drop it lower another, 50 cents, 75 cents, maybe $1. So if you have a complete understanding of buying it lower, then that's fine. They're already pushing lower. Keep in mind, they're testing the most recent breakout area. Doesn't mean it's to the penny. They're just testing the area. And they're off. Okay, right back. In the area, that's certainly not out of the question. That was part of the schematic. Trader willing to buy at the top end of the zone, like we discussed before, is willing to buy lower. Qs are bouncing. IWM's getting hit a little bit. Semis, as we know, are getting hit by virtue of AMD and NVIDIA on the board. Give them some time. We have patience. Right? Just because they're in the zone doesn't mean the trade is wrong. It means the trade is active. You have to wait for them to do their thing. Everything's mechanical. We just follow the rules, if you will, of the trade. Keep it as a process, treat it as a business. 3 minutes into the opening day, they're still opening the markets. Back above 435, really 435.07 is that number. That's what the bulls are looking for to get a follow through type of move. For now, that will be some overhead resistance. They could blow through it, but they could also just test it. Got to give them some time. Qs are doing okay. It's not a direct correlation, but it can't be a negative. IWM seems to be going the other way. One's going up, one's going down. Nothing you can do with that information. It's just knowledge. UAL, for those of you interested, is at a place right here. 56.93 was the number for a short. However, I think they hit it already. 92. Yeah, they can spike it, but that's should be some overhead resistance up there. I'm going to get another number. Hold on. 57.73. $75. That's high risk. I mean, yeah, it's pretty strong, obviously, over the last couple of days. Spiders are doing okay. They're working on it. Time is more important than price. You got to give them time to do it. Above 435.07 is what the bulls need. IWM turned around. Qs are starting to work on the gap. So they're ahead of the power curve. The IWM is catching up, and the spiders are in the middle. Remember, they start as a scalp with potential. The potential is up at 436, give or take. The scalp is 5 to 7 points, give or take, trader's choice in there. Depends on your entry. You just want to make sure you put a base hit in your pocket. Turn it into a risk-free, emotionless trade, gives you opportunity and options. Not tradable options, options on how you want to treat it. You want to let it ride, you want to take profit, you have choices. Now, I talked it through, Mitchell. All you had to do was listen. I even said you could buy it at the open, before the open. And the whole thing was laid out. I said nothing about opening below the number or, getting to the next number because they opened below it. That's, you got to just listen. Just put blinders on and just listen. Don't think about other stuff that you might have heard another day, the different circumstance, whatever. Just listen. Good job, Kyler. Kyler took a base hit already, holding a trailer. It could take some time. Nothing says they have to run up there anytime soon. We start with where's support, where's resistance, are they above 1 or below 1, and how long are they staying there? What's the tape telling us? All those things. Let's say, for argument's sake, they close this candle above in a couple of minutes here, this 15-minute candle, and then, is it likely they come back to run a test around 435? Yeah, that happens all the time. All the time. Doesn't mean it's a buy, it just means they do that. So you have to have knowledge of what's going on and don't get scared away because they're actually running a test of the number they just broke through. That's normal. We got a few holding the trailer, took the scalp already. That's good practice. You bought it lower, took the scalp, driver's seat. It may not close above the first candle, first 15-minute candle. That's okay. 10-minute close below, nothing above yet. So you have to have knowledge of where we are. Nothing above yet. They just tested it. This is the way I look at the tape. They just tested it. Qs came up short of their gap and fell away. So is this a shakeout underway, fake out, or weakness? We don't know yet, but these are the things that I'm thinking about. Maybe they have to get down to 434.25. Maybe, we don't know. I'm just thinking out loud. Okay, new low on the day. 434.25 is the next spot. This is why it's a zone. No guarantee they get to the number. They got close, they spiked the low, ripped it back up without getting to the next number. That happens. This is why it was a zone. They haven't done anything out of the ordinary. We're still in the midst of the morning trade. It's just not over yet. Some traders took a scalp, maybe have re-entered. Some traders are holding long, they added. Some traders were waiting for 435.25, didn't get there, I get that. It's all of the above. There's something for everybody. You have to do what you're comfortable doing. If you were waiting and it didn't get there, you didn't miss anything, they just didn't get to your number. That's the mindset you have to have. I would have to say so, Paul. I didn't see your comment in there, question, but yes. I would have, at present, I would have to say yeah. For now. May not be done with 434.25 yet. And that would be part of the normal thing. Why? Because the closer they get to a number, the more magnetic they become, draws price in. And if the number is in fact important, they should have at minimum of a bull bear battle where the first order of business in support is price stops going down. The second order of business is they either go sideways for a while or bounce back in the other direction. Nice job, Armand. Already 3K in the queues. Look at that. Have a nice beach day later. Still can't get there. Either way, still in the zone, and nothing's changed. Above 435.07, candle closes, they can run. Until that happens, they're in the zone. By the way, what's going on here? So that worked. Just saying. Don't know if anybody took it. I'm here, just waiting. Transports are up again, 0.5%. IWM is doing fine so far. If they finally get to 434.25, no change. Another test of 435.07. And it popped through. All right, let's see if they could do it this time. All right. I'd have to say that I'm assuming that traders who bought lower took a scalp off already again. Nice job, Jeff. 7 points, 700 bones, 2 contracts, nice job. Base hit Lee. And you hold the trailer. Kyler played it twice. Brian played it twice, 17-20, base hit, great job. Dirk, Thomas, well done. Patience pays. Nice job, Ron. Bandar, nice job. All of you, nice job. Start the day slow, see how it develops, put some money in your pocket, and you're in control. You're not chasing the market around, you're not guessing, you're not revenge trading, you're not trying to climb them out of a hole. None of that. That's all nonsense. That's not a winning strategy. We've all done that stuff. That's why I said it. In 30 seconds. Okay, I'm back. Nice job, John. 2.5K in his pocket. See you tomorrow. Nice job. Is this a normal garden variety retracement, or are they going to spike the low, get to the number, and rip it back up in the other direction, which would be another trade? You don't let the remaining portion go bad on you. You just buy it again lower. Depending on where your entry was, you have to make that decision. It's the same routine each and every day, every trade. It's part of the process. Okay. They spike the low, 434.25, below 434, it starts to be wrong because 432.65, not that they have to get there anytime soon, but the door would open. There's a lot of stuff in between. They don't have to get there, but that's the next number I have. From a bigger picture perspective, in between, there's other stuff. We'll talk about it if they do it. Right now, they were doing a retrace, which is normal garden variety, but you don't know if they're going to do that or spike the low. So you have to be prepared for either. It's still not over yet, obviously. Same routine, 435.07. That's the number. They have to stay above it. Have to get above it. Now, we talked about one of these yesterday, or maybe it was last week, but I think it was yesterday as well as last week. They went down. They didn't spike the low. They didn't get to 434.25. They're trying to work on 435.07 again. Is that because they're going to fail there again? Or was that just a little shakeout / retrace? We don't exactly know yet. But why are they back there again? They had an opportunity to get to the next number and they chose not to so far. So it's just my mindset. It's what I'm thinking. I'm just thinking out loud. Take it for what it's worth. It's not an actionable thing that I said. It's just what I'm thinking. And as I say it, they come back down. Of course. Murphy. Let's get another perspective. It's garden variety retrace. Where it winds up exactly, we don't know, but it's still, for now, a garden variety retrace. That's it. Whether they go up from here or go a little bit lower, it's still a garden variety retrace of yesterday's move from low, from last week to high, or Monday, sorry, to high. Okay? Or was this yesterday? Yeah, Monday. Okay? That's still all it is. Just keep everything in perspective. S&P's down 15 points today. It's a garden variety retrace. Could they be down 20, 22? Sure. Will they normally do a garden variety retrace and bounce? Yes. No, they're just following my instructions, Paul. Again, more perspective. They're like 25 cents, 30 cents from the original entry, give or take. It's just putting it in perspective of where we are today. Regardless of whether you got one trade out of it, two trades, or no trades, that's where they are right now. Here it comes, another attempt. Trying to get to 434.25. No change. Spike the low, 434.25 is an opportunity to rip it back up in the other direction. Or not. We'll see. Just looking, get another perspective. I don't like tails in the middle of ranges like this. I like lows and highs. However, it still is what it is, and it's not a negative. 30-minute tail. Garden variety retracement into a moving average. Hourly chart. Bearish pattern. Doesn't mean they're going down, means they have to get above 435.07 sooner than later. See how things morph from small to large, large to small. You look at it both ways. So you have to know where you are at all times. Bearish pattern. Doesn't mean it won't go up. We have this to hang our hat on and a normal retracement to hang our hat on so far. But the longer this goes on, the less the bull case and more the bear case for another push lower comes into view, because this could retrace more and that could fail. Certainly. That's why I don't like them in the middle of ranges. They don't work as much. Variable risk, right? I take a tail where it gives you something to trade against, meaning if it goes below the low and closes below the low, then the tail doesn't work. And you take out the variable risk of saying, hey, I only like certain ones in certain places, and the others, not so much. That variable risk that I try and take out of the market as part of the process. They're trying. And there she goes again. Okay, new high. That's a good sign. Nice job, Kyler. Yeah, a lot of you played it again. I know that. That's fantastic. I talked about all the things I talked about so that you as an individual can make your own decision. That's what this is about. It's about feeling comfortable with the decision you make, which gets you in a trade you're comfortable with, which keeps you in a trade rather than being uncomfortable and looking for a reason to get out of the trade that promotes bad decisions. So when I talked about all these things on these different charts, those of you that were looking at it and listening and saying, all right, I see what's going on, and I'm understanding where I can take my risk, and that's the thing. Now it's turning into a Whopper Junior for those that were buying in the zone and stayed with it. How do you like that? Good job, Rakesh. Yes, it is, Kyler. You're welcome, Rakesh. Now, the target is still up here. It just could take some time. Nothing's changed. And there's nothing here except the gap. Now, they're going to get halfway home and fail. Anything's possible, but that's just at face value what's going on. There's nothing here except the gap. How long it takes to get there, we don't know. Will they get there? Normally, they're going to get there at some point. If they get below 435.07 again, that comment is off the table. And stay there, you know, not just another test, but they start getting below again. Now you're back to the bearish thing. Come back down to test the same area. No change. Doesn't mean it's bad. It just means if they get below and stay below, then it gets bad, meaning they're back to the bearish pattern thing. Maybe they're not done yet. That's all that means. This is why you take profit along the way. When they give you those runs, you take some off the table. Can you help me understand, Jorge, what feels like? Like, can you define feels like? Qs are up, IWM's down 0.2%, transports are up 0.3%, S&P's down 0.2%. The reality is not much is going on. And you can't define feels like. That's the problem. There is no such thing. That's a limited belief, Jorge. You got to get out of that mindset. Just take the market at face value at the time. That's the point I'm trying to convey. If they get below 435.07, something different than is what going, pardon me, something different is going on than what's going on now. If they get below 434, something different is going on than staying above 434.25. 434.25 would still be a bounce place if they came back down there. Has nothing to do with feels like, jittery, all that stuff. Nothing. It's a limiting belief, and I want you to get out of that mindset. Rewire the brain. This is what we try and do here, little by little. Doesn't happen overnight. I understand emotions. I understand everything. The red is the 20-period moving average, Ilya. The black up here is the 200, purple is 100, and this is 50, the blue. It's hard to distinguish sometimes between some of them. But I've been using the same colors for years. I'm not changing it. And intraday on a short-term chart, they're just that, short-term. They're just guidelines short-term. Okay, Jorge, thanks. Listen, believe me, I'm here to help you. I want you to be successful. So when I hear stuff like that, I do this on purpose. I'm not doing it to you. I'm doing it for you and the benefit of everybody else. When I hear comments like that, I have to, in my mind, I have to respond in a certain way that helps you understand that the thinking is incorrect as it relates to the market at present, if that makes sense. Even though you may not believe that right away, over time, it will become clearer. Alice, we're long the spiders right now. You don't want to short the market. When you short the market into a holiday weekend, this is what we are. This is light volume into a holiday weekend already. If you're thinking about shorting the Qs here, Alos, you're looking for a trade, no matter what it is. That's a symptom or sign of over trading. I'm helping you. I'm not hurting you. I'm just trying to make you have an awareness. If I'm right, if I'm wrong, so be it. Just think about it correctly. You want to take the stuff that makes the most sense. Right now, we're in a long trade, or a lot of traders are in a long trade, riding the spiders up to that gap one way or the other. As long as they stay above 435.07, I don't really care where the Qs go from here. I can't tell you they're going to pull back from 364.90 while the spiders are going up, and I'm looking for the spiders to go up. So that's why I have to respond that way. SMA, Jeff. Maybe EMAs, Ilya, versus SMA, exponential moving average versus simple. I use simple. Check that. Kyler says, Powell says he does not target specific parts of the market. Right. All these people lie every day. It's just remarkable. Of course they do. They don't target the bond market. They don't target the equity market. They don't target the financial sector, some way, shape, or form. Of course they do. When they pump money into the market one way or the other, they're targeting the equity markets. Well, I don't think they buy equities. I could be wrong, but I don't think they do. Other people do it for them. When they pump money into the market, they're buying equities, believe me. It's an inflationary thing. Even though they're trying to bring inflation down, when they liquidate the market, if you will, liquefy, it's inflationary. Inflationary to equities, at least. All right, let's focus on here. That's why you don't short the Qs up there. You know, the target is the target still. They're basically there. You got to take, you got to take it off the table. Something as they get close. So how many traders were on the ride up there? Lee, Matthew, Dirk, David. Never mind, the names fly by too fast. Thank you. I appreciate you having the confidence in what I was telling you and looking at. Armand, have a nice swim day, beach day, surf day, whatever it is. Yeah, this is just fantastic. We got a whole litany of traders. I can't even read them fast enough. Yeah. Walk you through it, talk you through it, tell you what I see, show you the reasons why. Here you go. Well, that's my exit. I still have some left, just in case. Is there any reason they can't make a new high today? I don't know that they will, but is there any reason they can't? If you can come up with one, let me know. You're welcome. Yeah, I mean, if you have a trailer, Jason asks, where do you protect it? Well, that's a trader's choice because it depends on where you're in from. If you're in from 434, 75, I'm making it up. then you don't want them to go back down there and have like a break-even stop. That's too far. Excuse me. At this point, you have to exit around 436, 436.15. So at this point, I wouldn't let them. Yeah, you're right. 435.70 would be like, that's it, if it's a trailer. So, you know, I'm going to still make a nice profit on that last piece, but I'm not going to let it go away. I think that's the right approach. So I agree with you. Nice job, David. 1,700 bucks, pesos. No, they're bucks, not pesos. What a nice trade. The potential never know. This is why I'm still holding a trailer. So, and some of you are, I'm sure a lot of you are. This is why we weren't shorting the Qs, right? We were long. Not going to be long one market and short the other when they're going to do the same general thing. Yeah, how do you like them apples? You're right, Mark. Yeah, this was a nice one. Yeah, I get that, Matthew. 200% on some of the options. Sure. Of course you did. If you're playing the same day stuff, that's what happens. A garden variety of resistance at the gap, one way or the other. They're not going to just blow right through it. I'm not suggesting it's a short. While they may come down, I'm not willing to short the tape. I'm still holding a trailer. 600% on the daily stuff yesterday. That's unbelievable. That stuff's risky, though. You know that. It goes against you. It wipes you out. Not wipes you out, but wipes out that trade. We know that. But when they work, hello. Now it's a simple, you know, there's no magic to this. Close candles above 436.15. That's the bull case for another run higher. They could eat time off the clock under it for a while. They could pull back and they can blow up. We don't know either way. If you're holding a trailer, don't let it go all the way back. Even if it stops you out and rattles you around and goes back up, so what? It's a trailer. Don't look at it like you did anything wrong. This is the free ride part of the thing. Nice job, Gustavo. I understand, Matthew. That's fine. Even with small risk, or pardon me, small positions in those same day options, you know, if you're managing an account, you know, as a process and you're managing an account mechanically, I would say this is what I would do, just for me, right? You could take any rendition of this or throw it away. I would say, all right, I'm going to put X amount of dollars in this account and I'm going to use the same day options. I'm going to take small positions, but I'm going to let the account compound and I'm going to increase those positions over time, not double and triple. But, you know, if I'm just making up a number, I'm using $1,000 on a trade, then maybe I step it up to 1,200, you know, something like that. And then, you know, you do that for a while, account grows a little bit more, you step it up to 1,300 or 1,400, and you kind of go from there. When I have something like that, I like to keep the accounts separate, even though it's a pain in the ass at the end of the year and all that stuff. I like to keep things separate. If I'm doing something like my options account is separate. I don't like to mix and match it. Yeah, I know that, Alan. The people doing that know that. And Alan's saying, be careful with the same day options, use small, you know, percentage of your total account, whatever. We all know that. It's good information. But we find out the hard way why you do that. Again, normal garden variety resistance up at the gap. That's not rocket science. That's just the way things work. It could last a while. They could eat time off the clock. They could go right back up. Any one of those three things can happen. We have no idea which one it's going to be. Let's just, you know, we lay it out on the table. What we did know was where support was and what the target was. What we don't know is what they're going to do right now over the next 5, 10, 15, 20 minutes. What we do know is if they start closing candles above 436.15, that's the bull case for another run higher. But until they do that, they're not ready yet. This 10-minute candle closed at 436.17, 2 pennies above. Is that a hint? I don't know. Right back below on a 5-minute. That was 1 10-minute. It's not good enough. And no 15-minute. So it's not good enough. See the way I look at that? It's got to be sustained. Yeah, Matthew, you got your rules. That's fine. Whatever makes you comfortable is what your rules should be. And it's all depending on, you know, your own risk, your own account size. You do what you're comfortable doing, and that keeps us in the game. And when you win, it's a lot of fun. Just call it what it is. Sometimes it's like stealing. I'm not sure, Jorge, about Monday yet. I'm not sure. But have a great weekend anyway. Either way, not sure if I'm going to do this on Monday or not. It's half a day, and frankly, the market should be really, really quiet. I don't know that it will be, but it generally will be, you know, a normal type of day like that. So maybe we should just take the day off. I'll make that call maybe tomorrow. Yeah, I might, Mark. No, the market's not closed Friday, Mitchell. It's closed Monday, half a day, and Tuesday, all day, 4th of July. You can go to the NYSE website, and they have a holiday schedule. Just type in Google NYSE holidays. It's usually the first return, and you can see what all the holidays are and when the market closes. Like Monday, it closes, I believe, at 1 o'clock. There's a rule. It's a NYSE rule. The market can't be closed 4 days in a row, and that's why it's open half a day Monday. That is the reason, 100%. It's not because they need people to trade half a day. It's the rule. They can't close it 4 days in a row. And since 4th of July comes on a Tuesday, that's the reason. It's always been like that. And when you have those half a days, that's generally the reason. It's the rule of the NYSE or the market in general that they have to provide liquidity. And part of that, a subset of that, is not closing it 4 days in a row. 3 days, including a weekend, is okay, not 4. Yeah, that's just information, David. Like, you can't really do anything with that, but it's just stuff to know. It's knowledge. I like knowledge. I had a sign above my desk when I was growing up that my father put there. He cut it out of a newspaper and he taped it above my desk, and it stayed there for years and years and years. And it was a very simple sign. It said, "Knowledge is power." It was there until I moved out. And it was there after I moved out until they sold the house. 436.50, 55.60 will be natural resistance also. You know, before they get to the high, if they're going to get to the high. At this point, you're either riding a trailer or you left. There's not going to be a short trade that I'm going to suggest before lunchtime, regardless of what the market does. Not after this trade. No chance. If today turns into a one-trick pony, one trade day, I'm fine with that. Look at this one. A lot of traders got a lot of points on this trade. When you're, you know, some of you are still getting started, some of you playing small, that's fine. And some of you made thousands already today. You don't need to do anything else. If I said to you, hey, you're gonna have one trade, but you're gonna be able to make some number, 2 grand, 3 grand, 4 grand, 1,500 on average on those winning trades. You're gonna lose some, but on the winning trade, you're gonna make 2 grand. Okay, would you say I'd be okay with one trade a day? Yeah, of course you would. It's 40 grand a month on average. You're gonna lose some, I get that, so it's not. But some of them you're gonna get a lot more than 2 grand. Yeah, that's normal, Ron, because you know what you're doing and you're selective. And thank you. Ron only has 2 losses since he's been in the room. It's been a couple of months, 6 weeks, something like that. Thanks, Matthew. Appreciate that. Nah, it doesn't matter, Nick, because everybody's different. You know, maybe Ron's playing with a $2 million account. Maybe he's playing with a $20,000 account. Maybe he's playing with a $2,000 account. It doesn't matter. The point is that you pile up the wins and the base hits put you in the Hall of Fame, and it doesn't really matter what the numbers are, because if you treat it properly, they compound and you all get to the same place. And that's why it doesn't matter. You're welcome, Ken. Normal stuff, gap, just not ready yet. That's good, Jeff. It's fantastic. And when you're comfortable, you'll increase it a little bit in terms of the position size, a little bit. We all have to prove, not to me, not to somebody else, you have to prove to yourself that you can do it profitably. Profitably, is that a word? You can do it for profit. You can be successful. You can make money on a regular basis. Your account has to go from lower left to upper right. You're not going to win every day. There's going to be losses in there. That's part of the business. But you keep the losses to a minimum. You don't let something get out of control. And then You compound the wins. And I'm telling you, I say it every day. There's a reason I keep saying it. The base hits put you in the Hall of Fame. I'm telling you, this is a base hit business. And the doubles, triples, and home runs come when you least expect it. When you swing for the fences, you strike out. You all know that. We've all done it. This is the one. I'm going all in. No, it wasn't. Now I wiped out my account. That's a normal thing, Dirk. But you have to be honest with yourself. Listen, I'm making money on average almost every day. That's fine. Now, then you can't do it with a demo account. You can start that way just to get used to the whole concept, but it's not a representation of what you're actually going to do with real money. You have to have a stake in the game to find out. Even if it's a small stake like the micro contracts, the MES, that's okay to start with, but you have to have a stake in the game. You have to have a real, tangible profit or loss to work with. The demo stuff doesn't work. You're eliminating part of the risk you need, which is the emotional end of the business. That's not variable risk. You have to have that, and you have to be able to manage it as part of this business. Fear and greed, those are the two things in the market. Nothing's ever changed. It's been like that since the beginning of Stone Ages. Fear and greed. I fear I'm going to lose on the trade, or I fear I'm going to lose more money on the trade. I'm in a trade, it's losing. I fear that I'm going to have to take a loss. And I'm greedy that I'm waiting for it to go higher so I could squeeze another $100 or $200 or $1,000 out of the trade. That's greed. And I'm not following instructions and exiting before the number. I'm waiting for a higher price and it doesn't get there sometimes, and I have to end up exiting the trade at a lower price than I should have, which leaves money on the table. That's greed. Just follow instructions. Sometimes the market will spike the number and you have that little tiny quick FOMO, you know, shoot, I missed another 50 cents. I missed another 5 handles, whatever. You can't think like that. What you need to think of is, look at what I got, not what I missed. Look at what I got. I got another winning trade in my pocket. My pocket is full. I have to use the next pocket. That's the way you have to think. Well, not if you follow along here, Nick. That's the whole concept, is I'm trying to take out that risk as much as I can. It's always going to be there, but the emotional end of it, the psychology behind it, if you just follow what we're doing, a lot of the stuff that used to bother you in trades will no longer bother you in trades because you're not thinking about it. You're just thinking about, hey, this is what they're doing. They haven't done anything wrong. They're at a number, they're close to a number, they're whatever a number, and our target is this, and I know where it's wrong. And well, you don't need anything else. And I've already proven it. I don't have to like show you, okay? I've proven it over and over again. This works. Most of the trades are going to win. Most of the trades are going to win. They're going to be losers. I'm going to be wrong. The market's going to do something that I wasn't anticipating it doing. My number could be wrong. All those things have happened and will happen again. But when you look at the 80-20 rule, the large majority of these trades each and every morning will work. And even if they don't work right away, we have a, real-time adjustment situation when we need to. So Ron brings up a good point, and I want to read it out loud. Hold on a second. Before I do that, let me just update the notes real quick. I'll be right back. All right, let me just give you some info. 435.50, give or take, is an area that A, they could test, B, can be support, C, if they stay above, it keeps the door open for it to be somewhat of a higher low pullback situation. Getting below there opens the door back to 435. Okay, 50-cent clips, kind of. All right, Ron says I write all my trades down in a notebook and highlight the winning trades in green and the losing ones in red. At the end of the week, it's a great feeling to see how you performed. Well, that's number one, correct, and I'm glad you do that. And the other thing about that is what you always want to do is take another step, and I think Ron does this anyway, take another step and say, all right, out of the red trades, out of the losing trades that I may have had, what was the reason? Was it just wrong? Did I do something stupid? Did I guess? Was it David was wrong, whatever, what happened? And here's another one. What time of day was the losing trade? Was it first thing in the morning or was it in the afternoon on your own? And you have to start analyzing when you do things, what happens when you do them. Do you have a pattern of doing even stupid stuff or good things? Either way, do you have a pattern that you're not even aware of? But if you have this log, then you can analyze it and you'll see things that you don't necessarily think about when you see it in writing. Yeah, Ron says he writes notes next to the trades, of course. And that's the whole point. You got to write notes so you remember on the spot. You know, write it in a scrap piece of paper and you do it later. But when you're in a trade, good or bad, you got to write down what happened. Write down any feelings you had. Write down what you might have thought that was right or wrong. And write down some of the things that I said on the chart. All those things, the more the merrier. You know, you do whatever you like. I'm giving you like the whole bucket that you should, as a new trader should do, any trader should do. That's good, Abe. Base hits, base hit. No, Anthony, I did not. Well done, Lee. That's good stuff. Good, Abe. I'm glad. It's all about patience. So here's my concept with the trailer. They start getting below 435.50, I'll probably get rid of it for a profit still, but it's a small piece. It's like 25% of my original position. And so again, I'm just holding it for the never know until they tell me no. Let's look at this a different perspective again. Okay, remember what we said before. Normal garden variety retrace, they did that. They filled the gap, they did that. Okay, that was the target. Retrace, back to the gap. That was the trade. All right, laid it out, zero dark 30 for the most part. All right, so the question is, are they going to fail and come all the way back down, which they can, or is this a higher low and a follow-through day? On-time low, confirms the low yesterday. Do we get a follow-through day, or do we just go sideways today from here, stay near the highs, and that's okay. But leading into the end of the week, the odds favor, doesn't mean it's a guarantee, but leading into the end of the week, the odds favor floater into the holiday weekend. That doesn't guarantee it, but that happens a lot. We'll leave it at that. I'll be back I'm going to take a break, a couple of minutes here, walk around. All right, so I'll be back in a few minutes. I don't want to cover that up. Nick, it's in the course, Lazy E-mini Trader. If you've taken that, I'm happy to explain it to you. If you haven't, then you could think about it someday. Not selling it to you, I'm just telling you where it is. It's the foundation of how I teach time. Time and price. They're two different things. Time is more important than price. I'll be right back, guys. Looks like here comes 435.50. $57 low. Nice job, Jack. I like it. You know, the morning rush is over. Now they've filled the gap. They got to the target. You know, they're going to put in a higher low, and from where and how long does it take? It take a couple of hours. You know, this is not the same as the morning trade. There's nothing else. That's it. No, Paul, the trade is over. That's what I just said. I mean, you can, but I'm done with this trade. I mean, I still have the trailer, but I'm done with this trade. Any questions, comments, complaints? Hang on a second. I got a candidate for something. Maybe you never know. Hold on. It's a little far away, but you never know. I like these with the small spread. Watch this. 207.90. Never know. Down to 207. Never know. As long as they're below this, there's a chance. Yeah. You got it, Lee. No, sorry, Lee. That was Shannon. Oh, no, Lee, the spread I was talking about was the two numbers. The spread between the first number and the second number that creates a zone when they're close together, that's a good zone. The closer they are together, the better the number. That's what I said spread, and I get why you thought that. So Shannon's saying, AbbVie, watch this. You see this low? 131.10. Today's low, 130.96, and the rip it back up in the other direction. Everything, all charts act and react the same way. Isn't that something? Doesn't matter, we're looking at a 10-minute chart, a 15-minute chart, like this today, spike the low, all that stuff. It's all charts act and react the same way. It's remarkable. And I didn't invent it. The charts do it. You have to just be able to see it. You look at them long enough and you see things that other people don't see. Everything that we talk about is directly from the chart. There's no magic. It's not easy, but there's no magic. Yeah, I did look at it, Kyler, but I don't think it's good anymore. What did I say, 29? Yeah. No, you see this little shimmy? That needed to do that here. No, it's no good anymore. Gold's got to come down more also. So you got to wait. But it's good that you write this stuff down or put it on your charts. And it's good that you ask. Rakesh took this trade here in front of it, 435.56 against 435.50 for the higher low. Okay, I said it. Nothing wrong with that. Kyler took it too. Okay, I wouldn't call that rogue. I told you where support was. You want to jump in front? That's up to you. So what are they doing now? They're reading time off the clock. Doesn't matter, it's sloppy. They're reading time off the clock. That's it. The shorter the time frame, the sloppier it looks. What are they doing? Well, they're still grinding higher and just finding resistance at the gap. That's it. Retracement, higher low. Could take a couple of hours, but why can't they get up here? Could take all day. And they may not, but you don't know. See how things morph depending on what time frame you're looking at. Get a different perspective of the charts. Another pullback, 435.50. This is why it's no longer the morning trade. Now it's just back and forth, eating time off the clock, pullbacks, little bounces. It's mush compared to the morning trade. You need participation in the market. You need them to have targets to get to. Now that they've already done the targets, meaning they got to support, they got to the former breakout area, they got inside of it, they bounced, they filled the gap. Those were two targets on the downside and the upside this morning. Now that they've done that already, now it's the ability, for me at least, to see the next thing that has to happen under normal garden variety conditions is more difficult, because there is no next thing that has to happen. Those two things this morning were the likely scenarios. Get into that zone and fill the gap. That was the trade. Now, if it was a different kind of tape, a different kind of market today, there may have been a second or third trade, but there's not. And I'm going to wind it down for the morning session pretty soon. Again, they're just eating time off the clock, going back and forth. Chop shop. Nothing more, nothing less. Is anybody playing games down there at 435.50 again? Not games, but buying it. Oh yeah. Okay. Okay. Forgot who I was dealing with. No, Michael, I mean, I get what you're saying, but not really. It's a quiet day. And where was the risk? Down to 435.07? I mean, were they really going to blow through that? The odds were not. They could, but it's just odds. This whole business is probabilities. So when you have a quiet day and they come into support and they come into support again, they come up short, they get into it, that's testing it. So while I understand what you're saying, but maybe it was just okay that time. $2 for the day, Jerome, great job. Yeah, and you're using a portion, you're risking a portion of the profits, Michael, and that's the proper way to go. You're not risking the whole profit. Well, they may. Get out of the feeling business. Doesn't mean anything. If they get above 436.15 and stay there, then the odds increase they will. Then that's the way you have to look at it. You have a feeling they will. You know, feelings are, they really have no place in the market. My opinion. It's kind of like hope. Feelings and hope are in the same camp from what I, you know, from my perspective. Hope is not a strategy. Feelings don't matter. Market doesn't know your feelings and doesn't care. Yeah, feelings are for your wife. Right, you lose with feelings because you had a hunch. A hunch is a feeling. It doesn't work. Just stick with the numbers. Be back in 30 seconds. Let's do a, yeah, hopium's no good, Steve. Let's do a last call for alcohol. So I'll come back at 12:15, but I'm gonna take a break for a while and I'll give it a minute or so and then we'll just enjoy the trade. Order rejected. Just so you know what that was, I set up my next order. Forgot I had a stop actually in the system, and I recommend you not do that, but I have to do it because I'm doing this for you. I had to take it out in order to put the order in. 436.50, well, they've already been there. Still, it's still overhead resistance. I'm taking an exit when they get up to like 55. And I still have one more left. All right, I'm gonna wrap it up for the morning session here. Be back about 12:15. We'll put the sign up. I think it was a pretty good morning. Appreciate everybody. All right, we'll see you in about 50, 55 minutes, something like that. Michael, the next spot higher is what I just said, 55 to 75, let's say, and then you have the highs that are slightly higher, and then you have 437.45. 437, you know, you don't know what they're going to do. This time of day, they could grind, they could pull back, anything could happen, but those are the next numbers. Okay, all right. I'll see you guys in a little while. I'm back. I don't know where that sign went. It disappeared on us. So they made a new high, and they got to 45, didn't they? 437.45. What was the high? 44. Really? I mean, that's pretty interesting. That's an example of why we exit in front. I'm out. I exited up there. That was it. Just before there. I'll show you where I exited. See this gap right here? That gap is 437.23. So 437.23 is right here. So they stopped there for a few minutes, and then they went up to the 45, coming up short by a penny. That was my number. My number was above the gap. My number mattered more than the gap. Funny how that works. Can they still go higher today? They can. I don't know that they will, but they can. You never know. Now they're in an uptrend. Yesterday, they were in a downtrend. Short-term charts. See how things change shorter term very fast, very quickly. I was in from the lows, down in the zone, down here. Or where were we this morning? Down here. That was an answer to Paul. That was my last piece. That was my trailing trailer. I had multiple exits along the way. That's how you do it. Completely risk-free, emotionless trade. They do it, it is what it is. Nice job, Gerardo. 1.6 today. Yep. How about Nick? 4,500 bones. How about that? Yeah, it's an adult number. Another Nick. 2 Nicks. That's pretty much it for the day, guys. I mean, there's nothing else. Stick around for a few minutes, but I'm going to call it a day. See how slow the market is. There's nothing to do. You were either riding it or that's it. Don't get ahead of your skis there, Nick D. It would be great. If you're doing it, it's great. But if you're not there yet, one step at a time. I don't know, Gerardo. It's a lot. Let's see. We're looking at Bitcoin for Shannon. Let me find it. Which one again? This one or this one? It's this one. Bitcoin US dollar. Okay. Is that right, Shannon? Bitcoin US dollar. Yeah. Let me get, I don't need this. Okay. Hold on 1 second. Let me get rid of this. Let's see what we got. So your question is, Can you look at the next resistance if it gets above the current, so it gets above this pullback area, right? So it gets above here. Where's it going? So I already ran a test of that. Good question. Give me a minute. I got to look at my bigger screens. Okay. That's what I come up with. Now you can't even see them. So that's what I come up with on the weekly chart, or on any chart. It's not the weekly chart, but that's what I come up with on Bitcoin. If they start running higher, they should get to 34. You're welcome. See what else we have. Yeah, Nick, everybody experiences that stuff, Nick D. You just have to pay attention. You have to just follow along. If you can come up with a good reason not to follow along, let me know. Just follow along. Put blinders on. Just try it. 1 week. Follow along. Don't do anything different than I'm talking about. Nick V, the bull falling wedge. What are we talking about? Let's see. What are you talking? I'm not sure what you're looking at there. From the bull falling wedge, you talking about the pullback into the 20 period moving average? Yeah, it's not a measured move. It's a retracement. It's not a measured move. Not the way I'm looking at it. I don't see a measured move. If I don't see it right away, then I'm looking too hard. Lothar, let's see what you're looking at there. Yeah, but that doesn't mean there's a trade. That doesn't mean anything. There's no trade. In other words, we're done for the day. You shouldn't be looking for a trade right now, and I know some of you are, but the market is slow. It's going to chop around. It's not going to get to numbers. It will get to numbers. It'll have, spike rally out of nowhere. It'll fall out of nowhere. You got to trade when there's participation in the market. There's no participation right now. It's being driven by the computers. The wedge from June 15th. Yeah, that's the pullback into the 20 period moving average that we talked about for 2 weeks. Right. You can call it a wedge. I can call it anything you want. I call it pullback. But if you're talking about measured move in terms of retracement, it's basically halfway home, give or take. I don't know for sure. Let's see. 382. That was a 382 retrace. But that's not the reason the number was there. How funny is that? Maybe that's a funny how it works. Maybe that's what you meant. No, it doesn't matter. You call it anything you want. Last call? Last call for alcohol. Last questions. I'm going to wrap it up in a couple of minutes. You're welcome. Sure, Jeffrey, put it in. Jeffrey, first of all, every trade that I give you, I expect to work 100% of the time. So I don't look at it as one's more risky than the other. How much conviction do I have? Every trade is exactly the same. They won't all work, but when I go into a trade, the only reason I'm talking about it, the only reason it's on the board is because I 100% expect it to work. So none have more conviction than another. This was the design of the morning trade. This was the trade. So everybody has their own risk. How much you want to put on is up to you. How much are you willing to risk? You have to reverse engineer that. So if I said below 434, it begins to be wrong. And that opens a door for a different kind of tape, different kind of market, different kind of morning situation. Then if you're entering a trade and you know that how many points it is to 434 and how much your account would be down below 434, and if they stayed there, how much pain are you willing to endure? That's how much risk you know how to put on. If it's too much, then you're trading too heavy. And that's the way I look at the risk. And I'm never going to put you into a trade where we can't get 5 to 7 points out of the chute for a base hit minimum. I say that every day. That's what it is. I'm not a 2-point trader. No thanks. And then the pre-design was up to the gap. So we knew going in that it was a minimum of a 10-point opportunity. If they went lower than 435, it increases the opportunity. And that's the way I looked at the trade, risk included. I hope that helps. And I know it's probably unconventional way of looking at things than maybe you've learned in the past or other people do, but keep in mind, everything I do, almost everything I do, is most likely unconventional from anything you've ever seen before. It works for me, and it works for most of you who are participating. Yep. Yeah, Abby's doing okay. That was a longer term pattern there. That goes, Jeffrey, that goes to, and I'm not using this term at you, I'm just using it because I always use it. We don't do stupid stuff in the afternoon. The afternoon trades are not the same. I say it every day. And eventually you're gonna realize that if you cut those out, then your results will skyrocket. More profitable to buy out of the money call options. Also, Jack, more risky. Higher risk, higher reward. You're welcome, Jeffrey. You're welcome. Okay. That's going to do it, folks. All right. It's good morning. We'll leave it at that. Pile up the wins, take the W, move on. And we'll be back tomorrow in uniform, ready to go. And I'll let you know about Monday tomorrow. I'm leaning towards taking the day off, frankly. Not sure I see a whole lot of reason to be here. But we'll see. I'll make the decision tonight and let you know tomorrow. All right. Nice job, Michael H. All right, tomorrow in uniform, ready to go. Don't do stupid stuff in the afternoon. If you have a nice day, pack it in and just show up tomorrow. Store's open all day. You don't have to shop there all day. All right, folks, have a good afternoon. See you tomorrow. Appreciate everybody.